Hi folks, it's Chris Baynes at Coldwell Banker Seacoast Advantage. Hope you guys are doing well. Haven't posted in a while, but I wanted to get back on track in 2016. I want to go over a few things about what happened in Wilmington last year in the real estate market. Essentially, what we saw was another really good year in real estate, probably our best year since 2007. And that means appreciation, number of sales, reduction in foreclosures and short sales. So all of those are good things. You got to take into account all the stuff that's going on in our economy, though. And so you do have the stock market just recently lost quite a bit of money, but that doesn't always negatively affect us. Sometimes people will move things from stocks into the real estate market. We just keep an eye on foreign investors as they like to park their money in real estate, make sure they continue to park their money in real estate in the United States. But locally, every market, that's the one thing to remember, every market is local. So what happens here may not be the same thing that's happening in Florida, New York, California, and so forth. But what's happened here, last year we saw just over 3.5% increase in the median sales price and the average sales price. That's good. That's healthy. We don't want to see 10%, 12% increase in values because that's not healthy. It's not normal. What we expect to see this year is a return to normalcy or a continuation of normalcy. 2007 was our peak market, and 2011 was basically the bottom of our market. As we moved into 2012, we saw prices start to increase again. We saw the foreclosures being moved out of the market, although they continue to keep values suppressed. Short sales and foreclosures will keep your values suppressed if you have enough of them in the market. So we've seen a reduction of that. That's great news. We're going to continue to see some short sales. We're going to continue to see foreclosures. A lot of the assistance that came out there from the government to help the people that were in foreclosure or behind on their payments, some of those people are still going to lose their homes, and that's unfortunate, but it's a fact. So we will continue to see some of that happen, just not as high a percentage of the number of sales as we used to see. So what does this mean for 2016? A couple things to keep an eye on. Interest rates. Fed raised the rate in December, not a big deal. There's enough gap in the way they calculate the way mortgage interest rates are going to be that it's not having a huge impact on it, but we are going to see them edge up a little bit. We're just above 4%. Most professionals agree that we'll probably see maybe 5% by the end of the year. So that's good news. It means housing is going to continue to be affordable, relatively speaking. We also expect to see 3 to 4% increase in values as we move through this year. So while that's all good news, if you're waiting to buy, and everybody has reasons for buying now, buying later, just understand the amount of house that you can buy now is going to be greater than the amount you're going to be able to buy in a year, simply because interest rates will be a little bit higher, prices will be a little bit higher. So if you're on the fence, it's a good time to make something happen. If you have any questions, please feel free to give me a call. I'm going to try to keep updating this blog post a little more frequently than I had been to get you guys the information that you'd like to have. Always feel free to call us, check our website. If you'd like to get listings that come on the market as soon as they hit the market, please feel free to visit WilmingtonAreaProperties.com and sign up to get those listings. And if you have any questions, give us a call. Take care, and we'll see you next time.